great. All right, now welcome to the Aussie CPI Monthly Indicator. Right now, I've sort of emphasized that because I just want to get you guys sort of tuned into, what this number is. And we sort of did a session yesterday about analyzing the numbers and trying to work out if various numbers, top tier or middle tier, second tier, whatever you want to call it. So just having a look, right? And so just winding it back just a touch. Now, out of all the developed countries, like the G7, I guess you'd call them, now the Aussie is the only one that has their inflation numbers coming out on a quarterly basis, right? So, and it's been, this day and age, the way they can collect stats, you think they could actually make this more of a monthly figure so you can actually keep a track of it. So what they've done is they developed this monthly indicator. Right, it's the only thing we've got to go off, and that this is supposed to fill the gap between each quarter of the releases. Okay, we get the big quarterly release, and that's showtime. But this is the sort of monthly indicator. It doesn't mean it can't have an impact, but it's not the big number. Okay, and it's more of an indication. So let's just have a look at this. Reuters poll is for 3.4% with a range of 3.2 to 3.5. Which is sort of, I guess they're expecting on the higher end of expectations. And the prior number was 3.5. And that, really got the RBA a little bit, they're back up against the wall. And they're like, you know what, if inflation isn't going down, we're going to make it go down and start talking about raising rates or at least keeping rates on hold. So we've got this monthly number. Now, we'll have a look at the technicals in a second, but I've just set up the calendar here just to have a look across the board because I want you to be able to differentiate between this number and the big number, right? And this is going back to April, and you can see the numbers here, right? A lot more detail. Now, let me just get rid of that because now this thing here still comes out at the same time, right? This is the number that we're looking at today. Okay, the monthly one comes out at the same time. But you know what? When we're looking at the big numbers, it's the CPI year on year, quarter on quarter. The RBA have given themselves two other options to look at, which I think is pathetic. But so they can basically say one number's good, one number's bad. But looking at the last reading of inflation, okay, the quarterly release, the RBA weighted medium was a little bit stronger. Quarter on quarter, year on year, and the trim mean, we could never work out what the hell the RBA was trying to do. They're basically giving them three different versions of the same number. So, trying to cover every base. But you look at the overriding factor here, right, is inflation was 4.1. It came down, and I know the poll was 3.5. It came out 3.6, but it is still coming down. Right, inflation is still coming down. This silly, whether you call it a silly number, the monthly indicator, it was the one of the ones that did go up. Okay, besides the RBA sort of stuff. So prior number was 3.4. It's just sort of tweaked up to 3.5. So I mean, you can't get this more confusing because they've got, like, if you were just new to this, right? And I don't know, you might be sort of scratching your head there. Thinking, well, which one do I look at here? I've got this one here. I've got these other seasonally adjusted numbers. I've got the quarter on quarter, year on year. Then I've got the RBA weighted mean, trim mean, right? This is where, like, things have got a little bit nuts. It's these two things here that are important to us. And that's the quarter on quarter stuff, right? Now, as I said, we are dealing with this puppy here, which is just an indication of what is happening. Right? I wouldn't take it as a firm bet. That's where inflation is, but that's all we've got to work with, and that's what the market will react to. And it's just this number here. So we are looking for, just a slight little decrease in inflation. Now, the key to inflation numbers is looking at the other numbers, okay? As in, like, retail sales, employment. These are the numbers that can come into play. We did start to see a bit of a drop-off of unemployment, right? And that sort of takes a little bit of time to filter into the numbers because, and what I'm talking about is retail sales figures, because you've got to, like, once you're unemployed for a couple of months, that's when you can start to see things going a little bit pear-shaped, and that's when it starts to impact inflation. So it takes a little bit of time to get the economy rolling over, but there is a tipping point where inflation will all of a sudden drop dramatically. Okay, so that's what we have to sort of keep an eye on. So we're dealing with the weighted mean, the weighted or indicator, right? So that's all we've got to work with at this stage. Now, so I still think, so I take it with a little bit of a grain of salt. If there is significant variance, then yeah, sure, let's have a look at that. But let's just have a look around what's going on here on the actual other currencies, right? So now I didn't get a chance. I was just sort of updating this new sort of setup I've got here today. Now we've got a situation where consumer sentiment in the US actually sort of really picked up or picked up enough to get sort of bonds moving higher in the US. So we saw the US dollar sort of come back, and it was a sort of decent sort of move, right? I mean, 40 points on some of these instruments in this day and age, it's a little bit decent. But what we're seeing is the numbers sort of, the market sentiment shift very quickly on the numbers, which tells us that these are actionable trading events. So we had a bit of a dollar sort of sell-off, and then strong consumer sentiment brought it back into the game. And that was sort of, it's filtering through all the currencies. Now, that's a good thing, right? Because it tells us that all the major currency pairs are behaving uniformly. So it makes me a little bit more confident around what's going on. Now, the people may have got a little bit jammed up there on sterling on euro as it sort of tweaked above that level. There's like 20 points in it. And that's what I mean. Early in the week, we're not getting these follow through. We're not, we're starting to get the numbers come out now, which is where we sort of want to be focusing. But looking across the board here, the dollar index is basically back in the middle of the range. Swissy's sort of coming back to where it was. I mean, dollar yen, regardless of what the BOJ is saying, that's heading back to 160 at some point. Dollar CAD back in the middle of the range, as is euro. Now, sterling still going up, but sort of coming back towards that support trend line. Aussie back in the middle of the range, and you've got the Kiwi coming back to that sort of level there as well. Okay, so like there's not, like the place isn't on fire. Like usually I look at these, you're coming up to a key number and you see opportunities, you start frothing, right? Because you can feel like there's money to be made here. I'm looking at these and really drilling into the Aussie. I'm losing a bit of enthusiasm for what is going on, right? So, and just having a look here on the Aussie, right? Just look on an hourly perspective versus the daily perspective. Like Aussie's sort of sitting right in the middle of the range. We're going to need significant variance here to get things moving, right? And what I mean by that is we need numbers here that are, we're definitely looking at the range. We need to get it moving downside would be, and that sort of goes with the current sentiment, like the short-term sentiment from yesterday with the US dollar slightly rallying. We need a number, I'd say around 3%. Definitely 3.2, we'd get it moving downside, but towards 3%. And if we got a number above 3.5, well, it's moving against the very short-term sentiment, but we'll get a bit of a move. To me, this is, unless we get something outside the range there, this is going to be like a short-term opportunity at best, right? Like it's not like awesome. So, but I thought I'd cover it because it is an inflation number and there is some sort of level of impact here. Now, so looking at just coming back to the technical perspective, right? So just looking at the Aussie against the dollar initially, okay, it's sort of drifting sideways in a decent range. Is there a chance for the downside move here? Absolutely. If it's under 3.2%, if it's above 3.5, then we might see it come back and test the top side. But, if anything, we see the fluctuations in the US dollar sentiment is really screwing up any sort of substantial trend. A lot of the central banks are on this. We're waiting to see, wait and see, wait and see. And it's been dragged out. We were hoping at the start of the year that the Fed would start cutting, the economy would get squeezed, and then all the other central banks would start telling us what they're doing. But all they're doing at the moment is telling us that they're doing nothing, right? So that doesn't really, it's not conducive to getting nice, clean moves. Now, just looking at the Aussie here, right? So 67, the figure, is where the daily trend line comes into play. Okay, so, and that sort of lines up with the hourly chart. So that's why I've got that orange. It's not majorly significant. And on the downside here on the daily chart, 63.84, you know, nothing really we can work with there. Whereas on the hourly charts, we've got a support level here at 66.18, you know, 25 points below the market, and, you know, 50 points on the top side up at 67, the figure. Like, we need something major to get the ball rolling here, right? So that's where we are as far as the Aussie goes. And now let's just have a look at the crosses, because now let me come to the crosses on a daily perspective first, right? Because I don't want to sort of ruin the party, but there's not a hell of a lot to be sort of jumping up and down about just at these levels. Now, the crosses, right, more so than the Aussie against the US dollar, will move on these numbers if there's some sort of variance. But they may only move like 10 or 20 points, right? And is that enough for you to put the risk in the market? Excuse me. So if I just widen these out a touch, right? So looking at Euro Aussie, I mean, this thing here is basically tracking sideways, right? Now, I can't really draw a trend line from here to here, right? You're just focusing on that level there, the most recent level. So I like to leave these things a little bit bleak as they are, so you can sort of see exactly what's going on. Now, if we got really strong numbers, okay, it's sort of like, well, Aussie could sort of just drift down here. Don't forget, we have got a cut from the ECB, I think, factored in next week. So so looking at that, you'd think, well, wouldn't Euro Aussie go down here if we got strong numbers? I'm like, yeah, it actually could. It doesn't look too bad for just a slide to the downside. Okay, now if I was looking at that on an hourly perspective, right, coming back in, you can sort of see on an hourly, it is just drifting sideways, right? And is there a chance for a bit of a move here? Yeah, there is, but once again, we need that significant variance. Otherwise, we're sort of just dabbling in markets that are just drifting, right? And a drifting market is an uncertain one. So just coming back to the crosses here. Now, we've got loads of time. I'm just checking the clock there. Okay, Aussie Kiwi, like mid-range, just banging away in its usual sort of 110 to 106 range. Nothing much to sort of report there. Once again, if it's like all I would be focusing on this sort of perspective is what's happening at the moment. Well, downside, right? So weak numbers here, really weak numbers. Aussie Kiwi should drift lower. There's nothing to stop it sort of going down. Stronger numbers, as I was saying, Euro Aussie could just go down. Aussie Yen, I wouldn't be fighting that trend. So, you know, stronger numbers, Aussie Yen top side, looks like a bit of a goer. We come over here to Aussie CAD, you know what, it's sort of, well, it is sort of slightly trending up at this point. So stronger numbers. So all I'm trying to do at this point is isolate the crosses, which ones would easily go up with a strong number, which ones would go down. Okay, so that's where we are. Looking at sterling, Aussie, right? I'd actually draw another trend. Well, not that one there. Let me just get rid of that. Let me just clear that one. So just a matter of trial, like not trial and error, just draw the trend lines and then sort of work out where these things are going, right? That's the sort of key to sort of working out the crosses. You know, sterling Aussie right in the middle of the range, right? Ideally, I'd like it to be sort of banging through trend lines, because then I know where the liquidity is and what the market's actually doing. When it's mid-range, like a lot of these instruments are, it's, you know, it will move, as I said, if we get significant variance, but part of the market will be on the trade, a small portion, not the whole market. The whole market will be on the trade around the the trend lines, like Aussie Swiss, stronger numbers, yeah, top side for sure. But once again, it's pretty fickle, right? And I'm only suggesting the top side. That's where the trend is at the moment, and there's nothing to really stop it going up. That's the only thing. So if I come back to the hourlies, and you can actually sort of really come back and drill into that on the hourly perspective, and just drill these out. Okay, Aussie Kiwi just drifting sideways, starved of oxygen, waiting for a number to drop, which is this one. Aussie Yen, I mean, yep, it's tracking higher. We've got Aussie CAD just drifting sideways. You've got Euro Aussie sort of tracking sideways in a decent sort of range over the last, 2 weeks, 2 or 3 weeks. Sterling Aussie, sort of the same. And you've got Aussie Swiss here, sort of looking like it wants to go down, right, on an hourly perspective, which is a little bit different to the longer term perspective, which looks like Aussie Swiss wants to go up, right? So you've got a situation here where I'm not exactly jumping up and down. Like Aussie CAD on a short term perspective, yeah, it could sort of drift lower. This puppy up here. Now this one here, yeah, it could chop either way. As I said, like when these things, like there is cash in the crosses, and they will sort of move 20 or 30 points if there is some sort of level of variance. But you're dealing with a little bit of volatility. They stall, they whip around. When we've got trend lines in play, they do behave a lot better, right? So even, let me just get this. Now, let me just show you how to get these things up, because some of these tools can play up, make it easier for myself. Okay. Right. So, so there you go. There's Sterling Aussie. Okay. Weaker Aussie numbers. You'd probably be buying Sterling against Aussie. And there's a bit of a trend line here at 192.20. I'm like, yeah, okay. Well, that's something I can hang my hat on. There's nothing to stop it. And this is the thing I would be checking. So if I check the dailies here, and we're looking at that trend line was drawn from here to here on the hourlies, right? There's no daily trend line until 194, right? So that means on a short-term perspective, it's going to go up, but it's not going to run into a brick wall that we can't sort of manage their position around, right? So you're just looking for this thing to sort of drift, go with the current sentiment. Now, Sterling Aussie is sort of peaked, but I do like the setup of that 192.17. That's 40 points away. I tell you what, you're going to need significant variance to get that thing up there. So now, just weighing all these options up, right? And you're thinking, well, we know what we need as far as the number goes, right? We just need some sort of level of decent level of variance here. And as I said, the market doesn't jump up and down on this one because, I mean, it's just such a new number, right? And it's not like just new this week, but it's not like it's been around for 10, 20 years. It's a number to try and gauge inflation between the quarterly numbers. Okay, so the market will respect what happens here, but it's, just an indicator. And you saw before on the CPI numbers itself, it was a little bit higher when, compared to the prior number, whereas the CPI number was, 0.5% lower. So anyway, we just need something here. Now, ideally, you'd have a bit of a hunch with what is going on, like a bit of a gut feel for what's happening on the general numbers. Now, as I was sort of saying, the employment numbers, it takes time for that to come in and hit inflation. Because if you get unemployed, you stop spending or you're spending less, then that hits retail sales, and then that will flow on into the inflation numbers. It may take a couple of months or a quarter for that to actually come into play. Wage price index was a little bit lower, okay, which is pretty cool. Retail trade weaker. Like, we are seeing retail sales weaker. And this is the other thing too. We start to see weaker retail sales. I'll tell you what, if you're running a shop, you're letting people go, right? Stayed home this month because we're not selling anything. And that can be the kick on into employment, and that cycle really kicks into gear. So to me, at some stage, we are going to get weaker numbers here, right? I'm sort of dumbfounded. Global inflation numbers, and a lot of these central banks have been focusing on the services inflation now has become its own thing. But probably less so in Australia at this point. They may refer to it, but we don't have an actual services CPI number. I think the UK have got one now. There's numbers always coming out of the States. So instead of making this hard for myself, I'd be looking at one specific side. And to me, the central bank's already said they're sitting tight on interest rates, right? There's because inflation's sort of sticky around this 3.5%. Now, I showed you before the year-on-year numbers last time dropped from 4.1 to 3.6. So it is coming off. And we are seeing the impact of weaker retail sales and all that come into the market. So it's got to be something in there that maybe we get that surprise number. Now, you can cover all bases and go in with pending orders all over the place and make a meal of it, right? You can end up losing money just because you're over trading and over complicating things. Now let's just have a look at this thing here. Okay, so forecasted distribution. This is quite interesting, right? 7 respondents or forecasters said 3.5, 3.4, 3.3, right? So, and then one said 3.2. So they're all sort of thinking, well, less than last time. I mean, the poll's 3.4, right? The smart economics number, this is the punters that got it right last time, is 3.4. Does that lead to the Aussie coming off? I don't think so, right? It's already factored into the market. So I can't see that doing anything. But a number closer to 3.2 or below will get the ball rolling aggressively, right? That sort of gets me excited, gets me enthusiastic. So now, weaker numbers here, right? So just coming back to trying to work out what instrument you're actually going to trade or not, right? You can just actually watch the number. The very short-term sentiment coming from the New York session, Aussie sort of just drifting lower. Now, right at the very moment, it is a little bit higher, but I wanted breaking through this level. That's when I'll get enthusiastic, right? That's if we got really weak numbers, I could potentially sell at market or wait for it. Now, Aussie 66.38, it's just gone up to 52, right? So does that tell me the market's sitting short? Maybe leading into the number. Now, looking at the crosses, okay, where's a weak Aussie? What does that do for me? Okay, well, sterling Aussie, it is close to resistance. That could be a good opportunity to sell sterling. Well, I actually need a strong number there, don't I? Top side, well, I'm going to have a chance to buy that after the number. I don't need to get in outrageously at the time of the release. Just having a look across here. Now, if you guys have got a suggestion of what you might be looking at, then by all means chime in there. But weak Aussie. So sterling Aussie up. Yeah. Euro Aussie will definitely go up. Aussie Swiss down. Could be a bit of an option there. This is the thing, right? It should stick out like a sore thumb, right? And nothing really is sort of jumping out of the page at me. If anything, sterling Aussie, weak numbers, I sort of like the look of that. So I'm just going to get my platform up here and let's get this thing into play here. Where are we? And just move the controls here. So I just want to get sterling Aussie up, and I don't have it on my chart. Nice one. I don't like doing this just before the number either. It's a bit annoying when they were changing some things here too, which is not great. They haven't got my sterling Aussie up there. Right, I got to chase these guys up. That's even worse for me because that's what I was sort of looking at. Now, let me just make sure I'm looking at the. Okay, gonna have to get that fixed. Okay, so Sterling Aussie's out of the game at this stage. Now we do have 3 minutes to go here, right? So let's just have a look. We come back across. So Aussie yen obviously going up. Just looking at where's that price action? Hang on, let me get you on the right screen here. Just looking at the price action here on Aussie, right? It's just short term. You got to respect whether the market's short. I mean, and don't forget, guys at the banks. I mean, we're not conspiracy theorists, but we're always going. It's going up here short term. Maybe the numbers are going to be strong, and that can be a thing. 67 the figure. You know what? I'm just going to go back to the Aussie against the dollar, right? Let me just come back. So I'm losing the controls here of my webinar thing. Okay, so I'm just looking at the Aussie. So this is a safe bet. Now, trading the Aussie against, and I'm just going to change this to 5 lots so I can hit it twice, right? Keep it in a small number that you guys can sort of work with. So I've got a level here on my other chart, on my sort of like Metastock chart. Let me just work out what that is. 66.17. Okay, so now I'm not going to be going in with pending orders here, right? Because there's sort of no levels. I've got levels below the market, 30 points below and sort of 30 points above. You need some sort of decent number here to get it going. Now we've got 1 minute 55 to go. So let me just run through what I'm going to be doing. This is a situation where if you can see the number, right, you can look for both sides of the market. Now, it's very hard to sit there and have, your finger on the button in between. We used to do that, but you don't need to do it at this point. Now, I would be focusing on one side of the market. So I would have the cursor over this button here. If it comes out weak, I'll just hit sell, right? Then I'll work out where I got in and what I need to manage. If it comes out stronger, I'll have a look at the price reaction and then I'll consider what I'm going to do. But you know what? I don't like going into numbers guessing, is it going up or down? I usually have a good indication. This is what we're looking for. This is the trend line. This is the direction, but we don't have that at the moment, right? So just looking for a sell opportunity there would be fit into what I'm thinking. Well, that's going to push the RBA into coming out and saying, okay, well, inflation is moving around a fair bit and it's weaker, right? We've got something to talk about. Yeah, Aussie's still at 50, right? We got the screens up. Now at this point, you've got to be confident with what you're actually doing as far as the order setup and everything else. Otherwise, you're just going to end up just giving the market some cash when you're not sort of thinking about it too much. So I'm looking for a number, 3.2 or below. I've got to be careful where I hit sell because it could gap a little bit if it's significantly weaker. Okay, 8.7. Let's have a look. Price is still pretty steady. Oh my God, 3.6, right? And the Aussie's gone up like 1 point. That's how much they're looking at this stuff, right? So that construction work, okay, so just looking at the price action here, it is really, I'll tell you what, there was a bit of a chance there. It did jump up 10 points afterwards. I was looking at that and just going, all right, let me just get my pen. It was sitting around 54, did not move for like an easy 10 seconds. And I'm thinking, well, if that doesn't move on a stronger number, it's not really going up, right? So anyway, we could have taken like 10 points. That's what I'm saying, like 10 points. That's not what we're really here for. But look at these numbers, and this is what could be clouding things a little bit. Construction work done, minus 2.9%. And this indicator, right, is a little bit stronger than the prior number, it's going to give the RBA something to talk about in the sense that they'll be like, yeah, inflation's sticky. But once again, it doesn't really, understand the number. It's not like, as I said, this isn't the quarterly number that we would put the house on. This thing's gone up 5 points. It's nothing really to write home about. Okay, so, that's all she wrote, right? It's you can sort of tell, like if I was looking at this, which I was before the number came out, looking across the charts, you can sort of see straight away. It's like there's a lot better opportunities in this one, right? Just looking at the Aussie where it is. Funnily enough, maybe that goes into what we were saying. It went from 32 up to 50 before the release. Maybe some of the punters already got the number, but it's still sort of mid-range. Then you look at the what it's doing against the crosses. As I said, you will get a bit of movement on the crosses, but it's not like an easy entry, right? If anything, the crosses have moved a little bit more than the upside in the Aussie, because don't forget, the US dollar is a little bit stronger at the close of business in New York today, so it's fighting against that trend. There is 10 or 15 points here on the crosses, but I don't see it. Well, I hate the fact that it's going to give the RBA some room to say, yeah, look, we're right. Inflation's, still high, but you know what? We get the real numbers at the next quarter, and they will tell us what really is going on. So all in all, guys, this monthly indicator, I guess, you know what, in the big scheme of things, as far as sort of like an educational sort of piece, this was above the maximum, takes the Aussie a little bit higher, does not much, but it's offset. This is another thing, when you've got two numbers working together, if one is weaker and one is stronger, it sort of nullifies the whole opportunity. And that's probably something to take away from this, more so than just the inflation number itself, right? So you got to be conscious of that. And you know what? Construction work is massive, right? So if that's starting to fall, that's going to have implications going forward as well. I know construction costs and everything else are through the roof, so it would make sense that the work getting done is diminishing. Any questions on that, guys? I mean, it wasn't, as I said, like a hell of an opportunity. Instead of cancelling these events when I see that there isn't much of a chance, sometimes it's good just to go through the event and actually sort of explain a few things to you as we go. It gets you thinking sort of, exponentially about the technical side of things, about the fundamental numbers, price action, then setting up the orders. It's a good process to go through regardless. Any questions from anyone? I mean, it's sort of back to business as usual now. If actually, whilst we're there, let me just give you a bit of a heads up here, because there's some European numbers coming out here. What have we got there? Let's have a look. So my thing isn't populating. Let me just hit these. Save. Because so there's the German CPI numbers, right? Like all the states have to sort of get in their numbers through the course of the day. Now, Germany is the crux of Europe, right? So just be aware that these numbers, I mean, they're usually pretty close to the mark. Like a lot of the numbers at the moment, we're expecting higher year-on-year numbers and lower month-on-month, which sort of clouds the whole issue, right? So anyway, just keep an eye on that. That's probably the only thing I would really be looking at over the next sort of 12 to 16 hours are those inflation numbers, because the rest of the time we are waiting. You know what? We get into tomorrow, into Thursday, you've got a whole bunch of much more tangible things to be trading, right? So you got Aussie numbers, you got Swiss GDP, all the sentiment numbers out of the Eurozone, and then you get into the GDP numbers out of the US as well. The PCE price index Friday is definitely the main event, right? So hang on to your hats, because there's better stuff coming up. This was like a bit of a warm-up run through of a inflation number. Yeah. Sorry, was someone going to say something there?
Yeah, right, right into this side. I have a question on the CPI number for this Australia. So we don't see any revision there. So my question is how often we see the revision in these numbers? Because for me, CPI is quite important number.
Yeah, not this monthly indicator, right? This is just, as I said, it's more of a novelty number that the market was screaming out to the RBA saying, listen, why don't you give us a number here that we can track inflation. It's doing that. Yeah, I'll just show you that number again because you do get revisions on the big number. Okay. And that monthly indicator, it's exactly what it is. It's more of just an indication. So if you come back to the big numbers, I haven't put any revisions up on this. So like not all the numbers have revisions, but I thought some of these CPI ones generally do, but they haven't actually. There isn't any revisions here either on the key numbers here. So I'll just keep an eye on that. I'll go through and have a look through the historical perspective because like some of the numbers do, like you can obviously see the retail trade do, wage price index quarter on quarter. I think I'll try and find a list of which ones they do revise and which ones there isn't any revision. The revision allows them to sort of smooth the impact of the numbers a bit more thoroughly, right? Because, you know, this number here, it's just a drop the number in the pan. Was the last number good or bad? Well, it was just what it is, right? There is no sort of adjustment there. So, which doesn't, it's neither here nor there. The revision actually gives us an extra bit of information or can add weight to the trading opportunity. If there is no revision, well, you just go off the actual versus the forecast, and then you're really focusing on the range. Okay.
Yeah.
And just to finish on that, as I was saying, like we're not in it for just kicks and giggles, as in 10 points here or there. See the Aussies back at 52, exactly where it was before the release. The people who are chasing it, who have got no idea what they're doing, looking for that little fix, they've bought some and they're probably sitting out of the cash. So there's nothing really to get excited about there on that number.
Brad, I have a question. Do you find, I've just noticed that before these releases, say the 5-minute charts, they tend to trickle in one direction and then the release tends to push it in that same direction. Do you pay any attention to that?
Yeah, definitely on a bigger situation, I would. Now, I wouldn't necessarily, you can see it on the hourly charts anyway, but you're right. If you want to see it a little bit clearer, you can go into the smaller time frames to see what's going on. Now, this is more so important when it doesn't always go the same way, but like, as I said, we are conspiracy theorists by nature, like traders, and you're like, oh, someone's got the numbers. UK numbers a couple of years ago, like 2 or 3 years ago, they were all coming out, moving 100 points before the release and reversing, right? There was some massive leak in the Bureau of Stats in the UK. But it does tell us something, right? Usually ahead of the release, right? And just leading up into the release. Sorry, what chart am I on? Sorry, here we go. Like going into the release, if you start to see 5 minutes out, 5 or 10 minutes out, you see it start to go in one direction, it means the market's caught short, right? If it's going up, if Aussie's going up before the number and starting to squeeze, like what happens is, say, let me just clear that screen there. So the Aussie's just sort of sitting here and people are holding positions either side of the market. They're like, okay, this is good. Just stay here. You know, I can manage the risk. But if it starts to go up like 5, 10, 20 points, people who are short will start buying them back to cover the risk before the number. So it does give us insight into how the current market is sitting, right? And if you know it's short and it starts to squeeze higher, well, if we do get a stronger number, then it should start to accelerate to the top side because the market is already caught short and they're scrambling to square up their positions. So it does give you more insight into how the market is positioned, that's for sure. And you see it on like the big proper inflation numbers, right? Like the quarter on quarter numbers for Australia or the US, UK, wherever it might be. If you start to see the market sliding, it means the market is already positioned itself one way, and you've got to factor that in because, I mean, it doesn't mean the numbers come out strong, but if they do, we're going to see it shoot, right, to the one way or the other. Any other questions there, chaps or chapettes? Hutto, you got a question?
No, thanks, mate. All good.
All right. I mean, that wasn't sort of like an awesome one to sort of show you what's going on. You're better to see a good trade, one side, go through trend lines, you get all the execution and all these other things. But you know what? We'll get to that over the course of time. We'll have plenty of opportunities to cash in. But just remember, put it into your brain that the monthly indicator isn't such a big deal, right? Unless it's massively variant. But no one even knows how they're sort of working this thing out. So anyway, we'll move on and start to look forward or forwards on the calendar and see what else we can sort of poke the eyes out of coming up. What we really need is we need central banks to kick into gear, whether it's a stronger number or weaker number. Just tell us what they're doing, right? Whether they're going to hike rates or cut rates, because that we need the trends, right? All we're getting is sporadic data, strong week, and it's really not that conducive to good trading opportunities, and it leaves us with chasing the market, sort of like, and that can lead into a bad habit of just chasing the economic numbers for the sake of it, and you want to avoid that, right? These are opportunities to get into, but you really want the technical perspective and trends. That's where we make a lot more money. All right, guys, all the best. I'll get this up online and we'll get back to work. Cheerio.